Hello, everyone. On February 5th, 2025, I will be doing a live webinar just for the listeners of this podcast. So use the text feature to ask questions or email me at bookkeepermensch@gmail to have your question included. The registration link will be in the notes very soon. Enjoy your episode.
Paul Rosenblum is a bookkeeper, not an accountant or a CPA. Although the information in this podcast comes from professionals, it's meant to give you enough knowledge about these subjects to have a meaningful dialogue with your tax preparer about bookkeeping and taxes.
Welcome to 2025. Thanks for subscribing and following me on LinkedIn and this podcast in 2024. It was a year of growth for us because of all of you. So thank you, and don't forget, also subscribe to the newsletter over at Substack, although I'm not promising many posts there during tax season, but I'll try my best. It's a new year and a new tax season, and time to go through some tax tips for personal and businesses for 2025, also known as a 2024 tax prep. I'm taking a deep breath and not letting it out till April. Paul Rosenblum. Not only does the IRS change the rules every year, but your individual states do also, especially with the sales tax area. There are services that were not sales taxable in 2023, which were sales taxable in 2024. So be careful that you Google your particular state's tax law changes so that you are up to par with those. Today, let's talk about the changes in the federal IRS rules. As mentioned quite a while ago in episode 25, there were changes made to the 1099 NEC forms that us bookkeepers create in January of every year. From that episode to today, surprisingly, there are no more changes or additions. In short, the new 1099 rules involve Venmo, Apple Pay, the Cash App, PayPal, but not Zelle. Zelle is connected directly to your bank account, so the rules remain the same using that service. If you use the other services mentioned to pay contractors, then this year in 2025, for the 2024 tax filings, the services will report directly to the IRS the amount that you paid each vendor through their respective services. If you pay any individual vendor $5,000 or more, the IRS will create a 1099 form, and the bookkeeper doesn't have to. Now, I think I will anyway because I'm expecting some errors from the IRS being the first year that they're doing this, and I'm saying that as nicely as I can. If under $5,000 for the entire year of 2024, then the rules are the same for 1099 NECs that the bookkeeper creates and sends out emails through the service that files the form with the IRS. Episode 5 explains the whole 1099 versus W-2 situation, which really hasn't changed since all the way back probably 20 years or more ago. This is a conversation that I have almost every day with someone during tax season. Aside from 1099 NECs and 1099Ks, there are other tax tips and changes that I want to talk about. So let's start with the personal ones. 1. Inherited money. In 2024, if you receive less than $13,610,000, then that income is not taxable. Tell your accountant or your tax preparer about it, but it will not be income taxable. Number 2, life insurance payouts. In 2024, that money was not taxable for the beneficiary. So no need to put it on your taxes, but you might want to let your accountant know about it anyway, just in case their tax software differs. Number 3, workers' compensation. If an individual received workers' compensation, that money is not taxable on the tax return. Number 4, home sale capital gains. Up to $250,000 capital gains from selling your home might not be taxable. So check that out with your accountant. There are specific rules about that. Number 5, HSA, or better known as Health Savings Account. If you have an HSA, they are not taxable on the return. Child support and alimony is not taxable on a return in 2024. And gifts, number 7, up to $18,000 isn't taxable for the person receiving the money gift in 2024. That will probably go up in 2025, but as of this writing and recording, that has not been announced yet. Number 8, academic scholarships. They are not taxable in 2024. Number 9, education. Up to $5,250 of the money given to you by your employer isn't taxable for you. So take advantage of that. You can take part of that money and donate it to this podcast. Just kidding, kind of. 10, disability insurance payouts. If your employer pays the disability insurance premium, payouts for you are taxable. However, if you yourself pay the premiums out of your own money, then the payouts are not income taxable. And number 11, credit card rewards are not taxable either for individuals or for businesses. So I know this is a small business podcast, so here is a list of small business deductions. I will also be doing a webinar during tax season for a very large New York City nonprofit organization covering this subject. So if you would like to be invited, please let me know by emailing me at the Gmail address below in the notes. That's bookkeepermensch@gmail.com, and I'll be glad to put you on that list and give you the registration link. Now let's talk about business deductions. Number 1, we have talked about this before in other episodes, but I'll put it on this list as well, and that is home office deductions. If you rent an apartment or rent or own a house, you can use the square footage of dedicated office space as a tax deduction. For an example, if your home office is 250 square feet and your entire apartment is 1,000 square feet, then you can take off 1/4 of the rent and 1/4 of the utilities and 100% internet access as deductible expenses for your business. Number 2, self-employment tax. I can't really explain this very easily, except to say that you are taxed on being self-employed, but then you can deduct 50% of that tax on the return. Number 3, depreciation is taking the purchase price of equipment, for one example, and deducting the total amount over 3 to 5 years typically. However, there is something called Section 179, which is taking 100% of that purchase price and deducting it in 1 year. This is a conversation that you should have with your accountant or tax preparer only after your bookkeeper gives you the final set of books. Number 4, 20% pass-through deduction. Let's say you end up having a $50,000 net profit, which, by the way, is income minus cost of goods sold minus expenses. The IRS lets you take off a pass-through deduction of 20%, which means that your taxable adjusted income, would go from $50,000 to $40,000. You don't show it in the books, only on tax returns. Number 5, a personal car deduction. Generally, you would have to keep track of the mileage that you use your personal car for the business, and you get reimbursed non-taxable income at 67 cents per mile. There are other ways, but most people make out better doing it with the mileage than taking a percentage of gas, tolls, parking, maintenance, etc. Number 6, vehicles owned by the business. 100% deductible if it's a lease, but treated as an asset and is depreciated over time if you either purchase your leased vehicle or purchase a vehicle outright, or even if you finance that vehicle. Also, gas, maintenance, parking, and tolls are also 100% deductible. Number 7, business meals, or what some people call in the books business development, are 50% tax deductible. Refreshments, coffee, and snacks for the office are also 50% deductible, although they used to be 100%. So I would make a refreshments category a sub-account of business meals in your books. Number 8, payroll paid to employees, benefits, bonuses, all deductible for the business. Number 9, if the business contributes to an employee's 401ks, they are tax deductible for the business. Also, IRA SEP contributions are tax deductible for the business, but tax deferred for self-employed people. Number 10, renting or leasing property is 100% deductible for businesses. Number 11, utilities and office expenses, 100% deductible. Number 12, advertising and marketing costs, 100% deductible for businesses. And last but not least, number 13, charitable donations. If you own an LLC or a sole proprietorship, charitable donations are a personal deduction, and you must reach thresholds for that to happen. An S corporation can put charitable donations as a tax-deductible expense on their books for any amount. I think this list gives you something to work with for the next 2 weeks until I somehow figure out what to talk about next. For now, I'm going back to my tax season after a second cup of coffee. Welcome to January and tax season 2025. I'm Paul Rosenblum.